Good evening, ladies and gentlemen, and welcome to the Indo-Canadian Chamber of Commerce Thursday Talks. Okay, so I think we've got Brian Chang, Andy Mitra from BDC, who's going to speak about the solutions from BDC and EDC. We have Pramod Goyal, who is also the president of the ICCC and the president and CEO of Canada-wide Corporation. We'll be doing a bit of analysis of the government measures and talking about, some of the changes that have come in, some of the new pieces of, help that have come in today. Some of them as recent as today from the federal and the provincial governments. And then we have a segment which we call Hard Talk with Pramod Goyal. Pramod's going to ask some questions to our audience, to our panelists, sorry. And then we have a hard talk with the audience where we would like the audience to send us questions. And audience, please send us questions through chat. If you guys can send any questions through chat, and once we've got the questions, we will answer your questions. So that's hard talk with the audience. And I'll be your host tonight, moderator. I am a vice president of the Indo-Canadian Chamber of Commerce, and I also run a software company called Tangentia. So thank you very much. Those of you who attended last Thursday's event, thank you very much, and thanks for joining again. The rest of you, welcome to our series Thursday Talks. We have this is a series that will continue, and we'd like to see our audience coming in again and again. So welcome those of you who are joining for the first time. Now, obviously, these are a little troubling times, and we're an organization that many of you are members. So we need to have a disclaimer. The disclaimer is the information provided by the ICCC as a webinar does not constitute legal, tax, or accounting advice, but is designed to provide general information relating to business and industry. Also, the views expressed by our panel are not the events are formed by the speakers, and it's not actually ratified by the Indo-Canadian Chamber of Commerce. Now, I would request people to please do not try to make themselves the presenter. Otherwise, we would be left with no option but to expel you from the meeting. So kindly do not make yourself presenters. Okay, so the hi, we're fine here as well. So I think all is well that ends well. We've got people coming in.
Thank you. Sorry, guys.
No, that's fine. So again, we introduced this last time. The Indo-Canadian Chamber of Commerce has started a program called the ICCC Business Assist Program. So what is the ICCC Business Assist Program? So what this is a 30-minute phone-in counseling session with a member of the ICCC Business Assist team, discuss and explore possible options. So if you're a small business and you want some assistance, and if you want to know how to avail government benefits, if your business impact sounding board, you want some quick questions, some answers around business accounting, taxation, statutory filing, IT, business restructuring. Then we have an email, the ICCC at iccconline.org, and under the subject heading, just mention Business Assist Program. And somebody on our end will get back to you. And this is a free service. We're also looking for volunteers, people that have been in business for many years, people that have expertise in certain areas and want to contribute. Please do get in touch with Mayank at the ICCC, and we will add you to the panel. And then once you're added to the panel, you could get these. So we're connecting people that need consulting services with people that can offer these services. So this is something that we think we started last week. We've already got a bunch of requests coming in. So it's already working, and we want to keep doing this and helping people in need. And we also request on the other side, people that can assist to please assist and sign up to become a volunteer. So without further ado, the next, we'll start with our we just saw how to do this. Our first speaker is Chetan Sehgal. Chetan is a CPA, CA, IFA, CFF, CFI, CAMS, and MACC. Chetan is a partner and advisory service in forensic investigation and country coordinating partner India at BDO Canada. So Chetan will talk about financial consideration and fraud awareness, and especially when I had a talk with him, he talked about how business insurance is something key that a lot of us that run businesses probably did not pay as much attention, but going forward, we will pay more attention. So over to you, Chetan, and I'm sure you really educated me on a lot of things in our preliminary call. So I'm sure the audience will get educated as well. So over to you, Chetan. Chetan, either.
Yeah, okay. So the topic we wanted to focus in on today is I'll start off with looking at insurance coverage as a potential way for companies to recover their losses. And then talk a little bit about prevalent frauds that are coming up or bubbling up right now due to COVID-19 fears that the fraudsters are taking advantage of to get some victims and steal funds. So let's start with insurance considerations. The first thing you really want to do right now is check your existing insurance policies to verify if there's any coverage at all for that would relate to COVID-19 impact, including if you're in sort of the construction industry, builder's risk, and in generally speaking, the business interruption policies. As with any of your contracts, insurance policies will require notice, and these may be strictly enforced by the insurance companies. This area of knowledge has been developing. The various insurance brokers, associations, insurance companies, and the legal world is providing advice. It's a continuously moving area. If you are going to put in a claim, the insurance will require clear and demonstrable connection with COVID-19 and the claimed losses. So it's essential to maintain accurate records of events and impacts. Just like anything else, it's really important to document everything. If it's not documented, it did not happen. That's generally the approach that'll be taken. So in terms of what's available out there, there are different types of policies. So you'll see on the right side of the screen, I've laid out some of the languages that you want to be looking for, some of the wording in your insurance policies. And I'd really encourage you to contact your insurance broker if you do think you have any coverage, or if you don't, you just want to get some sense of where things are at. Some of the key wordings you'll be looking for is business interruption insurance, contingent business interruption, CBI, civil authority action, infectious communicable disease, and then you have some standard wording around ingress, egress, limiting access to your property, and again, as I mentioned, builder's risk insurance. The key ones to let's focus on 2 or 3 right now, given the time allotment, and then we can take up some questions after. In terms of the business interruption coverage, it usually requires a causal connection between insured physical loss or damage and the loss of income. As always, the specific policy language at issue is key and should be thoroughly analyzed in the event an insured submits a claim under their property insurance policy arising out of any coronavirus event. Ultimately, the key factual issue is whether the insured property was actually physically altered and or affected by the virus. Because many companies are not likely to have a direct claim for damage to their property due to COVID-19, they may look to other coverages in their business interruption policies. Just a note on the physical damage, depending on the policy you have, there may be certain leniency in terms of what may constitute physical damage. And again, it may be up for legal opinion if you need to go there. If the business interruption coverage is not sufficient or doesn't answer to your COVID-19 issues, you'll want to look at CBI. Is a contingent business interruption. It's another potential avenue for insurers to get some coverage. What it really does is it insures against companies' lost revenues or lost business in the event the insured customer or supplier, someone key in the supply chain, sustains insured physical loss or damage at their property. So the damage may not be directly to your property, but to someone who you rely on to conduct business. We can explore that further as well. The most obvious one, sorry, I'm just getting some feedback. The most obvious one we may turn to is civil authority coverage, which basically speaks to you're forced to shut down, which is what's really happened here in the lockdown situation. The civil authority coverage allows for lost profits stemming from action of a civil authority that prohibits, prevents, or impairs access to your business. Again, we can get into a bit more detail on this in the question and answer. In terms of really from an insurance perspective, where I would leave you for the time being is there are a few things you want to be keeping notice of is really, if you think there's a claim, you want to talk to your insurance broker, you want to put your insurance company on notice that you will be putting in a claim. There will be a lot of claims coming in. They're already coming in, and you want to get in the line to have your claim addressed as fast as possible. You want to start documenting the impact of the claim and perhaps keeping a separate accounting ledger or specific account to ensure all expenses that you're incurring are being accounted for and tallied up in that specific general ledger account to be able to prove it later on in an easy fashion. And if there are any issues with coverage, you may want to seek legal advice. So we'll move on to the next section, Vijay. Just let's talk about some fraud issues. Just give me 1 second. So from a fraud perspective, it's a really sad situation. You heard our Premier Doug Ford talk quite a bit about this, and others in their weekly and sometimes daily addresses. There are certain people who are taking advantage of the situation where there's a lot of fear out there, and fear causes people to act irrationally. You want to be looking out for things that have been happening in the past, but they're really on the up and up. Since I've been home in the last 4 weeks, I've certainly received at least 2 or 3 phone calls, basically phishing for information. So that's sort of your phishing schemes, whether it be through emails or phone calls, people pretending to be someone who they're not in order to steal your information, whether it be banking information, health information, to steal your identity. To steal funds either directly from you or on your behalf, for which you may be responsible afterwards. Especially now when people are seeking government support, they might be needing to log into websites, so there may be fake websites that are being set up that may look like you're actually on a CRA website trying to look for support, but you may end up being on a fraudster's website and putting in very personal information, banking information that could be taken advantage of. And there's many other situations like that. Crowdfunding is another one. I've been seeing some emails around people requiring help to get back home. They might be stuck in another country, or someone gets really sick, the family needs financing help. So crowdfunding sites come up. Some are legitimate, but you want to make sure they are legitimate if you are going to contribute to any of those. Investment frauds, that's another one. Looking at, hey, there's a company that may be coming up with a cure for COVID-19. You want to be the first one to invest in that. There may be other opportunities that pop up. One of the things you want to just make sure is if it sounds too good to be true, as always, it probably is. So you want to make sure you're doing your due diligence before you make any investment decisions. And that's what leads to the false cure claims as well. At the end of the day, there's a lot of things that can happen. There's cyber attacks that are on the up as well. There's always business compromising emails that come from someone you trust, from controllers within companies or people pretending to be controllers or CFOs or owners directing fund transfers. Just ensure you are vigilant, you are reviewing what you're paying for. If you haven't solicited advice or information, and if it's coming to you, question why that is. So at the end of the day, just stay vigilant and be alert. And when in doubt, double check, triple check, and call the individual or look them up. Do your due diligence to ensure you don't get caught by these fraudsters. So I'm just going to stop there for now, Andy, and I'll take any questions later.
Okay. Thanks a lot, Chetan. So Chetan will be available for more questions. And those of you who have any questions, please can put it down in chat. I'm coming in, but you can send in more questions as well. The next speaker would Brian Cheng is partner at MNP Canada LLP, and he will specifically speak on government's assistance to small business. So Brian runs the technology practice, so he has a lot of small businesses as well as technology companies as his customer. Over to you, Brian.
Great, thanks, Vijay. And again, thank you for ICCC for the invitation. Unlike Chetan, I don't lead our Indian practice, but again, I appreciate the chance to speak to you guys. I'll be short. So to Vijay's point, I'm a partner in our technology group. We work with the mid-market here in Canada through MNP, coast to coast. I want to talk a bit about insights from what I've seen from the past 4 or 6 weeks. I work with tech companies. I also work a lot with venture capital funds here in Canada and private equity firms. So I get involved with transactions quite a bit as well. So I'm happy to share some of latest in terms of what our clients are experiencing, hopefully to give everyone that's listening some insight on what to do nowadays, right? So, nothing what I'm saying is new. We're all experiencing the new normal with COVID-19. It's easy to be critical, I would say, of the government's process so far, but probably better to look at the outcomes, right? So, what we're seeing is the good is with the latest CEWS, which is the Canadian Emergency Wage Subsidy, vis-a-vis the 75% wage subsidy, a lot of larger companies have announced that they're going to rehire a lot of workers back, which is really positive. Not so good is the small companies, right? So, compared to the large global enterprises where all the government agencies are providing subsidies to support their workforce. So if you are a large company and you're an employee, you'll definitely benefit from the fact that your employers are getting small business loans, work sharing programs. And even in the scenarios where you cease to work, you will hopefully have access to EI and or the CERB program that's been available to you as an individual. As small business, though, it's really tough. The programs are not providing the immediate cash flows. Even the 75% one that's been announced with the latest that's happened over the weekend, it's obvious that they are providing the subsidy, but that assumes you have the cash flow. So you'll find a common theme now that it's really trying to help companies that have the cash to sustain themselves. And as you can see, a lot of the companies in the worst industries are getting hit by the new realities immediately. From the market side, from the M&A and again, market transaction side, it's clear that, it's very reactive to the new realities. COVID is probably the biggest threat to the global economy, generally speaking, since the Great Recession. The markets, NASDAQ dropped 30% from its all-time high. You compare it to SARS and the impacts there. A real example is I have a travel client who did go through SARS, but the difference is, again, is the global pandemic. That's really the impact of the business, right? For them, the reality is, even during SARS, where it was prevalent in Toronto, it still had travelers coming into the country. Whereas naturally nowadays, with all the travel restrictions, that has an immediate impact to them today. So it's very different than what we all experienced even back in SARS. Retail and e-commerce are going to be hurt more than others. Companies like Clearbank, who they fund e-commerce companies, laid off 17 people recently. Same for companies like Tulip Retail, where they're a tech company to luxury retailers. So the domino effect is there. The orders are being put on hold. Marketing spends are being put on hold. Interestingly enough, in the same time, health tech and biotech, and naturally all the work from home technology companies are faring a little bit better. I personally had 2 health tech deals that did close, whereas there was another one that was not in the health tech space that was put on hold. Right, a lot of companies and transactions that was actually going to close end of March just are now on hold indefinitely. Today, I think Verizon announced that it was going to buy Blue Jeans, a video conferencing company, for $400 million. So the impact of the market is just very to what we expect. To industries that are not impacted as much, those deals are still happening. And those that are not are having immediate impacts. And I think the takeaway here is, more so how we view the businesses you are all in. How anti-recession are you? Like, we never thought a pandemic like this could happen, but how can we adjust and pivot some of our business goals and objectives to kind of fit some of the new norms? In terms of M&A opportunities, I'll close this slide with saying, the debt opportunities are likely going to be closing from the general private equity side, and we expect to see more conservative lending behavior. Diligence, should you be entering into one, they're definitely going to look at more of your supply chain stability and your susceptibility to customers' buying behaviors. And the pricing and the structure of any deals that you may enter into now are likely going to have more earnouts, less cash up front, because of how it would definitely be tied specifically to your customer pipeline that you expect to have. So those are kind of things we see today, some good and naturally, some bad as well. Vijay, can we go to the next slide? So this slide really talks about all the Canada's plans so far, a lot of which I think you guys covered last week. I would speak high levels on the latest, which is the CWS. Originally when the 75% wage subsidy came out, I think a lot of concerns came through companies that are not naturally going to be impacted on the books. That, for example, the hotels and the travel industry likely was able to completely capitalize on this, but again, for technology companies, for small businesses that don't do monthly reporting, it was not as obvious how they could benefit. The clarity given by the government on Saturday with the new legislation gave some reprieve to these people. For example, if you have groups of companies whereby it's not as clear where the revenues are coming from, they allow consolidated reporting for some of these groups, which makes it easier, because a lot of times, whether you be in real estate or just a global business, you may have companies that were purely cost centers previously. So where you may only have non-arm's length revenue for that company, you would have been scoped out. So the latest is it is allowing for consolidated reporting. It is also allowing for cash methods versus accrual methods. So for companies that are just really trying to figure out the real impact to their companies, the businesses, it's really about the cash coming in. So the great thing now is they have allowed for cash methods where previously they did not specify that. And the threshold for the first period in March is only going to be a reduction of 15%. In context, all of this is trying to do is, over the next 12 months, the government is basically giving everyone, or every employer, up to 10K of subsidies for these employees' payroll, right? And the flexibility that it does provide is for the employers that have want to maintain the working relationship with these people. They are considering just a reduction of pay potentially for the upcoming 12 weeks. The rules are written in a way where, had the employee been working for, say, $2,000 a week for pay, you could agree to reduce their pay up to the $847 a week, and effectively be completely covered by the government's wage subsidy. Now, I'm not a lawyer, so definitely consult with your employment, lawyer on, how you do that and whether any of this could be considered as a constructive dismissal. But I think what we're seeing in some of our clients is, you enter an agreement to say, look, I want to keep everybody as much as possible. This is a program we want to use, and make sure that you do those properly in accordance with employment law matters, right? Other stimulus government programs, and I'm sure Andy will talk more about it, as well as, the BDC has a lot of working capital loans, and the SME loan lending program that's been, eased up a little bit, and more funds that are there to facilitate injections into the SMEs. Nonetheless, they are still looking for bankable companies. So again, in the world that I'm in, a lot of our startups just won't apply. But the new small business loan one, the 40K one, which I think everyone has been hopefully applying for through their banks, that's been helpful. I think Pramod mentioned there's an ease in the salary restrictions this year that was announced today. So I think those are all positives. But on the balance of things, again, the small businesses are still getting a little bit hammered here in terms of the access to the help. Next slide, please. I'll end it with this. I mean, big picture for a lot of you, either entrepreneurs, is really actually shining a big light on the resilience of a lot of you, a lot of my clients, right? And my take is a lot of our companies and owners are trying to do the right thing. They want to keep people paid. They don't want to let go unless they really have to. Very few are trying to game the system, and it's tough, right? I think the business community and the country at large is almost at war here, and the government providing these subsidies will cost us all at the end of the day, but it does keep the economy going. I think the one way to view all of this is it really actually speaks more to the business fundamental that we always talk about, but maybe sometimes neglect when business is good. Is, think about it. Are you generally cash flow positive? Are you running your business really from external funding or personal financing? Do you have a buffer? One example I can share is I had an e-commerce company that was running tremendously well, maybe hitting $20-30 million in sales annually. The bank at the time was trying to give them a white paper and term sheet and all of that, and they just didn't have the time and didn't see it as necessary at the time. But nowadays, with such a downturn in their business, as they try to reapproach the banks, now all of a sudden things that previously were not issues now become issues. So it's the realities of the world. But I do think that speaks more about let's secure the funding as we can for the rainy days. If you have excess cash today, hopefully are you creditor proofing your operating business properly? Are you being opportunistic, and how well are you able to forecast your business risks and be practical but not too conservative, right? The last piece I'll say is, it sounds all quite depressing. The one silver lining as well from a tax perspective is there's generally still some things to think about. If you have a portfolio of tax-free capital dividends, it's generally a good idea to pay them out now. And resecure them if you need it for operating purposes. If you have a portfolio of investments that have a lot of capital losses or presumed losses, perhaps offset them against any gains you have just to crystallize that. But just be aware that capital losses do grind down on the capital dividend that I just talked about, so just be mindful of that. And also, if you have previously done some estate freezes or for either personal planning purposes, consider thawing them and refreezing them, right? Because the value in which you freeze your companies or operations before likely have drawn down. So that's another good thing to relook at should you have done that before. So that's the end of my part. Now, the last slide, Vijay, is really just a site that we have as a resource to anyone that wants updates on COVID. Feel free to go on, and
Okay.
you'll find some help there.
Okay. Very much, Brian. And Brian, please hang there. We've got questions coming your way. So, we will have Brian till 6 p.m. So he will be there as well. So our next speaker is a lot of you probably know Andy already. Andy, is also active in the Indo-Canadian Chamber of Commerce. Is the Assistant Vice President at the BDC. Now, we do have a little problem with Andy. I think he's not been able to log into WebEx. But you know what? I don't think that's going to stop us. We've got him on the phone. And Andy, and any of you that cannot log in or know anybody that cannot log in, we're also live on Facebook. We're on Facebook Live. So Andy, you can speak and you can see your presentation on Facebook Live. So, when the going gets tough, we've got to think out of the box. So, Andy, if you're on the phone, please do join in. Andy, Mayank, do you know Andy's number? If you do know it, if you can just unmute him, please. Okay. Let's find out if we can get Andy in. Andy, if you so let's.
Vijay, the number that he has sent to me is 647-291-4687.
Okay, but I only see call-in user 9. So when he joined in, did he give himself a number, like a call-in user 72? Okay, so I'm going to just unmute everybody. Can you just unmute everybody and just we'll find out who Andy is, and then we'll mute everybody back. Mike, can you do that, please?
Sure, yeah, let me try.
अरे मिलने वाले थे ना उसके बाद नो फॉलो अप नथिंग एट ऑल कुछ नहीं
So this is temporary. Andy, can you please, Andy?
Andy Mitra here. Can you hear me?
नहीं I also did not pursue.
Okay.
Shobit only said.
Hi, this is Andy
मतलब नहीं है कि ये यहाँ
Vijay, take charge because everybody is talking now.
Okay, so I think Andy is 404-031. Just mute it, please.
Oh, hi guys.
अभी आजकल पता नहीं आशुतोष को क्या हो गया. I was just telling him कितना
Everybody else be quiet, please.
Great work. ये वो दिन में 2 बार आ जाता है.
Okay, Andy, can you speak once more, please, Andy? Pramod is the CEO of Canada-wide Financial Corporation and board chair of the Indo-Canadian Chamber of Commerce. And Pramod will now speak about his view on some of the government measures. Some of it were briefly touched on by Brian, but Pramod will go into a little more detail, as well as Pramod will at the end of this we will actually do a Q&A. So, but he'll do based on his take on some of the things that have been announced. So over to you, Pramod.
Thank you, Vijay. Very good afternoon to all the listeners and participants on this webinar. I think looking at the overall situation that we all in are, so let's take a look at where we all are today, what is happening. So we look at all non-essential businesses are literally either shut down or are deprived of sales, or those who are still functional but having to face steep decline in their revenues, like restaurants, for example, operating on a takeaway format only. And this has been going on for over a month now. How is the future looking like? For sure, the outlook is uncertain, looks gloomy. Normalcy seems to be distant, maybe months away, not just weeks. Looking at what we are seeing and hearing from globally all across. Even we look at within Canada, I was looking at StatsCan figures yesterday, which says first quarter GDP numbers was down by 10.5%. And even the outlook for the second quarter GDP looking like it will be a drop of 25%. More so, if we look at oil, it plunged to 21 low earlier this week. And as Brian was alluding earlier, even a CFYB survey finds that over 46% of the responding businesses feel they aren't sure if they would be able to reopen at the end of the tunnel or after the normalcy returns. So all this definitely paints a picture where things are not in the best of places where it should be, and everybody is struggling, especially when it comes to businesses, of course, individuals, everybody is affected. And these are harsh realities, and nobody can overlook. I mean, we're not trying to paint a picture of despair and gloom, but this is something that everybody is facing. But that does not mean that there is nothing that is being done to address the situation. Of course, multiple initiatives have been undertaken by the government, different quarters of the government, which are all appreciated. The government has come up with several income support programs for businesses like the Canada Emergency Business Account or wage subsidy up to 75%, and the additional loans that would be dispersed by BDC and EDC, and other tax relief measures. So several of them have been rolling out. But if we look at, have all these initiatives provided any financial relief to the small and or micro independent businesses? Even the Canada Emergency Benefit Account, a business account, fails despite being a program that is designed precisely to support the smaller businesses. When I talk about smaller businesses, I mean the qualifying criteria, of course, having a payroll of over 50,000, that does not fit in with a lot of businesses. They're just smaller ones. So where do we go from here? And I think that is what we were discussing even earlier last week in our call. So there were two bigger issues that still remain unanswered until this morning. One was the eligibility criteria for CEBA to cover more small businesses. And the other piece was the commercial rent situation. So what we were looking for is some expansion on that programs. And I think earlier this morning, if we can roll out to the next slide, Vijay, the Prime Minister made some announcements. And I think what they are going to do is, with the Canada Emergency Business Account, they made an adjustment. So it is being expanded to cover businesses with payrolls between 20,000 and 1.5 million. Earlier, it was 50,000 and 1.5 million. So it has been reduced, the limit has been reduced to 20,000 to cover more businesses, which definitely is a step in the right direction. And I feel that there would be a lot many other businesses who would be still eligible. But again, that may not still address the proper the requirement entirely. That's definitely a positive step. The second issue that was remaining unanswered was the commercial rent. So for that also, the government made an announcement today that they're coming out with a new program, which will be titled Canada Emergency Commercial Rent Assistance Program. Though no further details have been announced, and it is mentioned that that will be coming in the days to come, along with some consultation with the provinces on what the fine prints could be. But I think what we are looking at, and in my personal opinion, what businesses need is some sort of significant subsidy program to cover the rental assistance for at least few months. It could be on the lines of the wage subsidy up to 75%, subject to some upper ceiling, maybe $10,000 a month to cover. And of course, the major key issue that is desired to should be figuring in this is a eviction freeze for tenants who have not been able to pay their April rent or may slip into this program is not able to roll out money until then. So I think that is the second piece that should also be looked into. And I hope personally that this program, when the details come out, would definitely have these things covered up. Besides the federal initiatives, some of the other measures have also been announced by the provincial governments. Can we have the next slide, Vijay? I think we had some details on the provincial program that was announced earlier, not recently. Vijay, can we have the next slide?
Is this the one, the Ontario one? Pramod, it's on screen.
Yeah, the next one. Yeah, so thanks. So as you can see, I mean, Ontario also made some commitments as a province for supporting the businesses to improve the cash flow. I mean, there is no direct benefit except for some deferments in tax in terms of filing and late filing penalties or interest that were provincially administered on taxes such like employer health tax or tobacco tax or gas tax. We haven't seen any direct injunction of cash through any of the programs going into the businesses. And further details were to be announced earlier, but we haven't seen anything. But again, over and all, I mean, the departments, the government is functioning, they're listening, and with the constant flow of changes that are being announced, shows the acceptance of the government in terms of acknowledging the challenges and trying to come up with solutions so as to cover more and more businesses and individuals in the various income support programs that they're rolling out. So all in all, definitely positive outlook from the government side in terms of providing and extending help. And I think more is yet to come, and we'll see as things roll by. Now, looking at what my other panelists were speaking about in terms of different areas, Brian was talking about wage subsidy, the 75% wage subsidy that is one of the initiatives that have been rolled out, which is significant. And I think total exposure the government looks at is about $73 billion on account of that alone. I would like to ask Brian if out of the two programs that were rolled out, first initially, I think there was a program. Sorry, Vijay, were you saying something?
Yeah, Pramod, I was just wondering. I think we have Andy. If you want to just hold for a moment, and maybe we can have Andy go. Just Andy, do we have you on the in the meeting now?
Sure.
Andy, are you there?
Yeah, Andy here. Can you hear me?
Thank you very much. So, Andy, we had already made the introduction, Assistant Vice President BDC, and you're going to talk about banking solutions, small business. Go ahead, Andy.
Thanks, Vijay, and thanks, Pramod. Sorry for the inconvenience there. It took me a while to get on the Cisco WebEx, but thanks for all the technology that Vijay knows and his team. So thank you. Okay, coming back to where if my slide is on there, which I can't see, I'm just going to focus on the second, third, and fourth point there. With regard to BDC co-lending, the EDC guarantee, and the BDC working capital loan. So what is available right now? Right now, let's focus first on the BDC working capital loan. This was one of the first initiatives that was announced by the government. This is up to $2 million for working capital. It's based on the burn that companies have for the next 6 months, or the 6 months starting April. So you have your fixed costs, such as rent, some labor you have to keep, so utilities you have to keep on. All these things which lead to your monthly burn, and maybe you're operating at a lower than regular capacity, so you have additional burn because of that. All these add up to higher burn during this period. And the BDC loan for $2 million, up to $2 million, is for that purpose. Now, let's be clear here. It's not $2 million for everybody. If you're a smaller company and you have kind of a reporting which is not review and engagement statement, they're probably going up to $350,000 maximum. It all depends on a scrutiny of your cash flow burn. So for who are we going in for up to $2 million? These are very profitable companies which have been hurt, and they would have been able to cover the loan even before COVID, and now because of COVID they are affected. So the idea is give them the funds so that they can continue to do their regular activities or pay their bills for the next 6 months. What is involved in this? If your loan is below 100,000, if your request is below 100,000, you apply online. If your loan is above 100,000, you can make a request online as well. But if you know any of the BDC branches, you can call any of the BDC branches, and you can be guided. The ICCC can also direct it to me, and I can see how you can be helped. Now, in terms of what is required, all the necessary documentation is there. On top of that, there's the detailed cash flow statement projections for the next 6 months. And that is a key document. So if you've been profitable till before COVID and in your last statement, then only you're a good candidate for this. And the amount depends on your real need, which we will be scrutinizing in much detail. Regarding the other programs, the chartered banks who are providing funds, they also are going to work along with BDC, and that is the BDC co-lending program. In this situation, the loan amount can be a maximum of $6.25 million, but it is totally dependent on your revenue size. If your revenue is below $50 million, you're capped at $3.125 million. So in that fund amount, 20% of the money is provided by, let's say you're with RBC or CIBC or BMO. They provide the 20%, and they kind of invoice, let's put it that way, BDC for the remaining 80%. And they will do the complete underwriting, and then they will send it across to BDC and say, hey, give me our 80% that you're supposed to on this program. This program has to be based on underwriting of the chartered banks, so it is totally dependent on them. If you already have a good relationship with them, then it is probably a good idea to approach them first. But in any case, all business people have a relationship with chartered banks. The first stop should be the chartered banks. Ask them what they can help you. Postpone your principal. Postpone maybe the interest as well, if possible, because some of them have that program. And then work in tandem with BDC and see what we can do for you. Regarding the EDC program, I will not speak to it much because I'm not representing EDC. but it is a similar kind of program, but it is for a shorter length. It is through the banks. It is not at all through the EDC. It is directly through the banks. It is for a shorter program. The BDC co-lending program with the banks is for a longer duration. So the EDC program is for a shorter duration. Some of the chartered banks are liking this program because they can help the companies over the short period of time, and then they are back with their banks. So that would cover basically the nuggets of the BDC EDC program that I wanted to talk about, and I hope that was helpful. Vijay?
Andy, you have the second slide. Do you want to speak anything about this one?
No, the second slide is primarily about other programs available. It's a summary of everything that is available. So basically the first slide has 3 points, which is the BDC co-lending, the EDC guarantee, and the BDC working capital loan. Those are the 3 main programs that are currently available from the government.
Okay. Okay. So thanks, Andy. And I think we will have questions from the audience. So we will come back to you. But now, Pramod, we will get to a section which we call Hard Talk with Pramod Goyal. So over to you, Pramod ji.
Thank you, Vijay. Just since Andy was speaking earlier, Andy, just a couple of quick questions. You talked about the BDC working capital loans and the co-lending programs, loans that you have. Given the current situation, and I'm sure there must be a huge demand for these kind of loans and a lot of inquiries and applications. So in terms of timeline, what do you see? How long is any of these applications are on average taking, so that our listeners can have some sort of an idea if somebody was to make an application as to what kind of timeline are they looking at?
Thanks, Pramodji, for the question. Can you hear me?
Yeah, sure. Yeah, we can.
Okay. So the online program, which is up to $100,000, that basically I think is running at about a month lag at this point in time. So somebody would have applied around 16th or 18th of last month is probably doing the due diligence right now. We had about a week and a half ago 17,000 loan applications. So it's a big volume. We're not ready for such volumes, but we have, let's put it this way, we have put people from various departments into doing this. So right now we have about 400 people working on this. So it is helping. So the speeds are going to get better. And starting May, I think the speeds will improve further. So that is the online version. The non-online version is, from my experience, is getting picked up a little earlier, which is non-online is anything above 100,000 onwards. And that is getting picked up between 2 to 3 weeks. And then the due diligence might take another 3-4 days. So, and underwriting. So does that answer your question?
Yeah, I mean, actually, it does to some extent. What we're looking at, and we understand, like people are going through a cash flow crisis or emergency kind of a situation with all these developments, with no cash coming in or businesses being shut down, the overhead still remaining, and whatever commitments they had, they have to. So time is definitely very sensitive. But again, we can understand, given the challenges of the volume that an institution like yours would have to deal with. For sure. One other question, Andy, that I wanted to ask. Brian was earlier mentioning in his presentation in terms of strengthening of IT infrastructure, given the COVID situation, like a lot of companies and individuals have to work remotely. So I'm sure not every business or every organization was prepared for something like this. And there might be need for injecting a substantial amount of money in terms of creating or strengthening the infrastructure to work or facilitate employees working remotely. is there anything specific that BDC or any other institution that you're aware of is offering, which could be on a relaxed, parameters for specifically strengthening the IT infrastructure of businesses or companies in the current situation, or they have to go with the regular stream of the under the $100,000 or whatever the different options are?
Thanks for the question, Pramodji. Regarding if it was normal conditions, I would have suggested anybody, smaller companies needing the ID infrastructure, going for the online application. But since online is overwhelmed, I would say probably going through the regular route may make sense. We have an IT solutions program, which is a 4-year loan program, and I mean, considering the ask, which I would assume, and for most companies, is going to be in the range between 100 to 500,000, it shouldn't take a whole lot of time. It would fall in the track wherein we are trying to do where it would take anywhere between 3 to 4 weeks. But if they can spend the money or get the invoices and send them to us as and when the loan is getting done, then we can reimburse the company. So.
Okay. Thank you. Thank you, Andy.
Thank you.
I was actually earlier asking a question to Brian before Andy came in. Brian, we've heard situations where the government initially rolled out a 10% wage subsidy program, and then they came out with the 75 enhanced version. And of course, there are benefits on either ones, whichever is applicable. But one significant thing that I was noticing, and I think a lot of other people might be interested in knowing, is that the 75% wage subsidy program only covers the first 58,000 and change of the employee's salary, subject to a ceiling of 800 something per week. But if for small and medium enterprises where the salaries are more than 58,000, then the employer would be left with dealing with the rest of the payouts. So have you noticed anything in your client base or information through MNP as to what these companies are typically doing? I mean, they could have an option of laying off the employees to preserve the cash flow if they have, or they would continue to work with this subsidized program and pay out these major portion of salaries from their existing cash, even though there is no new cash flow coming in to offset any of these. So what has been your take, and what have you seen so far companies taking route on?
Hi, I'm muted. Is there a way I can unmute? Can you guys hear me?
Yeah, we can hear you now. Yeah.
Oh, okay, sorry. I thought I was too muted. Good question, Pramod. So I would say there's two general approaches that we're seeing our clients with as we kind of talk about applying for the program. So to your original question on, well, what happens when someone makes more than the $58,000 and you may have some higher paid employees. For those individuals, I think it's been a decision that they've had to make, whether they decide to keep them, which is what you were mentioning. Alternatively, I think, as I mentioned before, like companies, as they look at the applicability of the wage subsidy, and we can share with this to everyone later, but it's worded in a way where if you pay more, you're maxed out than the 58,000. So naturally, some companies are deciding to, again, just pay the minimum amounts to preserve the cash flow, and B, ultimately get 100% of the subsidy reimbursed. So that hopefully also shortens the cash constraints on the company. But then at that point, you're also balancing again how important certain individuals are, and again being careful about how you enter into agreement with them to lower their pay. Right? Crudely speaking, some people have had to let go of some individuals and potentially rehire them on a part-time basis as contractors. So that has been an avenue that people have taken. We've also taken advantage of the work sharing program, which I don't know if some of you may or may not have heard of. So that's a program whereby you effectively reorganize your workforce so such that there will be functions that are shareable amongst groups of individuals as work units. And what you ultimately do is instead of, so your position to them would be, hey, look, everyone knows of COVID and the impact of the business. Here's what I, as the leader of the company, sees in terms of our cash flow constraints. You also don't want to have to lay off. So out of, say, 10 people, look, I mean, if I have to make a decision today, I will have to let go of 3 of you. Through the work sharing program, arguably you could say, look, instead of firing 3 of these people, why don't we all agree to share the work? So instead of firing 3 of you, I will keep all 10, but you ultimately share the work. So on a weekly basis, out of 5 days, we enter an agreement where 3 of the 5 days you'll work for us, and I'll pay you the regular salary, and the remaining 2 days you'll claim EI. So I think generally what the companies have been able to do is approach their team and say, look, I want to actively preserve the team and do as much as we can to kind of go through this temporary, hopefully, downturn of the economy. But please work with me and agree to do a work share arrangement. And then if they do the math themselves, they generally are a little bit better off, the ability for them to claim EI rather than be either partially laid off or completely laid off, right? So that's been also something that people have considered. And, positively speaking as well, the government has extended the work share program from previously, I think it was a 36-week or 38-week program to a 76-week program. So compared to the temporary or even the emergency wage subsidy, it's a longer lasting program that kind of gives the companies more comfort that they will have a longer way to kind of sustain business versus the temporary and even the emergency wage subsidies. Those are really for the next 12 weeks, right? So I'll pause there. So that's been kind of what we're seeing today in terms of how people kind of address the temporariness of the wage subsidy and working with their people.
Yeah. So thanks, Brian. Pramodji, thank you very much. In terms of because of time, we will have to get to the hard talk with the audience segment. So so thank you very much, everybody. So we've already have a bunch of questions from the audience. One of the first questions, I would give this to you, Chetan. This is asked from Sai Ram Dhanam. The question is, there are food company that supplies food, and they've got orders from a retailer, and the retailer, obviously for COVID-19, they wanted to have a promotion with the retailer. The retailers canceled the promotion. They've got stocks lying in their warehouse, and they actually did take money from the bank, and now they're wondering how can they repay the money to the bank, or what are their options. So I thought I'll pass this on to you, Chetan, because is there something in the contract that they can probably use, or if there's that you think they can bring to the table? Chetan, are you there? Can we just unmute Chetan, please? Okay, Brian, you want to take that? When Chetan comes in, he can answer. Brian, could you? Brian, could you please? I think you were on. Chetan's there.
Can you hear me? Yeah. So for that situation, I think no. I mean, right now, I don't think there's any programs that are able to, other than the typical one where they do, lend against inventory, I guess is the question, right? Nothing in the latest programs would specifically address, unfortunately, that circumstance. And the unfortunate thing is, like the reality of them coming to you today, their view would be, well, are you able to realize these inventories? Like, how good is it? Which might impact the ability of how much you can lend against it. So it's
yeah. So thank you, Brian. So also, I think if you can just go, I run a company as well, and I was actually surprised how easy it is. And I bank with one of the larger banks, and if you say you want to extend the time limit on your loans, I mean, for line of credits, it is just easy, and they say, do you want to extend by 2 months rather, and you just take it right away. And mortgages can be extended by 6 months just on the website in just a few clicks. So I would strongly recommend everybody to just log into your online banking, and a lot of these features are already provided by the banks. So, just go in, line of credits, two months, no question asked, the credit is extended. The mortgages up to 6 months extended. So, I think definitely, something in that situation, you can definitely, if it's a line of credit, you can definitely get an extension. As somebody said, cash is king. So everything possible to preserve cash, do everything possible to see how you can not, you keep payment out. I have another question. Maybe Pramodji, you can take this. It said, since the government is providing only 75% of the wages, so if the employer decides, I don't want to pay the 25%, those of you, I think it was before you asked the question, Brian just mentioned how employers are only paying 75%. So they're reducing the payment amounts. You're paying the full amount, but you're not out of pocket. But the question here is, if the employer lets the employee go, is this considered as a constructive dismissal? So Pramodji, I don't know if, or anybody from the audience, but Pramodji, would you want to take that?
Yes, Vijay. In terms of reducing the wages or the salaries, I think Brian alluded to certain arrangements that are covered under the work share program to avail of the full benefits that the government is offering, with a ceiling of coverage of to about 58,700 per employee. So, of course, under the work share arrangements, the companies would be able to elaborate work share amongst the eligible employees and take care of that portion that they have to cover. But in terms of your question was specifically with regard to whether it will be constructive dismissal or not, but in case it's a refined work arrangement, it will not be amounting to dismissal. They're still an employee, they're still working, maybe with a reduced number of hours, or the other way around. I think Brian also mentioned was to change, basically lay off and then rehire based on new terms or new engagement. Either it could be part-time or contractual, depending on the necessity. I think, do you want to add anything, Brian? I think that is what you were mentioning earlier.
Yes. Thanks, Pramod. I think that the question about whether it's constructive dismissal, again, defer to a lawyer, but I think, similar to the work sharing arrangement, before you enter into the work share arrangement, you do have to do an agreement with the employee, including some consideration for it legally enforceable. So, I had a client who had to pay everyone $50 for them to agree on. For a lawyer to say this, if you were to ask them to reduce their pay purely for a work share arrangement, there needs to be legal considerations and be very careful about those things. So to that question, we now choose to just pay the minimum amount, which is the $847 a week. I definitely believe that unless you have considered the legal side of it, there could be risk that if you reduce a person that was getting paid $100,000, and there could be risk there, right? So, worthwhile a review.
Okay, and just on that note, we're going to have a legal panel 2 weeks from now, so we will definitely good question to ask them. So on just a couple of questions, and I think some people did raise a question. I think Pramod did touch upon it as well. So today morning, the bank loans now have moved to 40K and 1.5 million in payroll, from which was previously 40K to 1 million. So I think that opens up the window to more people being able to apply to gain from it. Now, just on the work share program, we have another question which says, can you actually claim EI under work share program? Do you want to address that, Brian?
Sure. I mean, technically, no. Under a work share program, you are still employed. So in order to be claim EI, you have to be unemployed. So no.
Okay. Okay, and then we have a couple of questions again. The question I think is this is, I don't know if you have Andy if Andy is here. Andy, the question is, if you do take any assistance from the banks, like a mortgage, a loan, will it impact your credit score? And maybe if you can speak in perspective, I mean, is there an impact? I'm assuming, obviously, you're taking money, so there is going to be an impact if you don't return it. But I think the question is more, is this really free money, or is there going to be some impact to the credit score? Andy, if you're there.
Vijay, Chetan wants to answer a question. Can you unmute Chetan, please?
Hello?
Yes, Andy, we can hear you.
Oh, hi. Thank you, Karan.
Yes, we can hear Andy.
Yes, we can hear you. Andy, go ahead.
Hi. So basically the question was, how does it go and affect your credit? Is that right? If you're taking a business loan, or a business-rated mortgage, then it does not affect your personal credit as long as you isolated yourself from the business. If you isolated yourself personally, and unless you're in default, or unless you've been taken to, unless your personal guarantee is being enforced, it does not hurt your personal credit. However, if you are taking a personal mortgage and you're defaulting, I mean, I'm not a residential financing person, but from basic credit understanding, I would say that if you default in a mortgage, especially a mortgage line of credit, and it's not arranged with the bank, it will go and impact your monthly payment. It does show on the Equifax credit rating whether you're paying monthly or you're not. So there will be some impact there, but under certain current circumstances, once this storm is over, I don't know whether there'll be a complete revisit of what the credit, how credit is adjudged going forward, because this was an unnatural situation. That is a completely different scenario, and I can't comment to that. Vijay?
Thanks, Andy. I think we've got Chetan. Did you want to answer that question? The question that I raised previously.
Can you hear me now?
Yes, we can hear you, Chetan.
Okay, wonderful. I think you answered the question from a financing perspective as to what they can do. I think the question was maybe around if there's any other avenue from insurance recovery or a contractual obligation that the food supplier may have towards this business. So I'm not sure what the individual who posed the question, what their contractual obligation they had worked into their contract. There may be something there to explore with their legal counsel. And also from an insurance perspective, the only thing that comes to mind is considering the contingent business interruption insurance I mentioned earlier, the CBI wording in their policy. It may be worthwhile looking at that with your broker. But if those two things fail, I believe the question that was answered from a financing perspective, that would hold true, and you did a good job on that, Vijay. Thank you.
Yeah, thank you. Probably we can have time for maybe another two questions. So one question. The last question here, and again, we will have more of these sessions, but last question, this is from one of our viewers here. He says his wife is also a Canadian citizen, is running a small-scale business in India. She invested funds from savings, and now does she have any access to Canadian emergency funds because her business in India is shut down due to COVID-19? So it's kind of a different, a difficult situation. Canadian citizen using Canadian funds from the retirement saving, but the business is actually in India. So does anybody want to take that? If not, Pramodji, you're the, if nobody takes the question, it comes to you.
Okay, Vijay, I think the typical situation, but see the programs that we have here, what we're talking about, the business, the Canada Emergency Business Account funding or the wage subsidy, they are primarily aimed at Canadian businesses. So in terms of any business which is non-Canadian or outside Canada, unfortunately would not qualify for any of these initiatives. So on the business side, I don't see anything that could be trailed to. Now, as far as an individual, of course, she is mentioned to be a Canadian citizen. And if she is eligible on the personal side as an individual to claim any benefit under the Canada Emergency Benefit for individuals, the up to $2,000 monthly grant for 4 months, that for sure she might, if she is eligible, she could claim that. But as far as business is concerned, I don't think because the business that she invested in is in India. So there is no correlation between I think that the Canadian incentives would be applied. We can't hear you, Vijay. I think you're on mute.
Okay, I think we're running out of time. We still have some questions coming in, so we will take those questions, and we will try to answer them. But I think we will put a stop to our event today. I want to thank everybody for joining in. Next Thursday, same time, 4:30 p.m. Our next session is going to focus on COVID-19 and international students. So international students, for those of you who know, we have a very large contingent of Indian international students in Canada, almost 200,000 students. So we're going to make this very much focused at international students. It's going to be a good event, and I'd like to invite all of you to that event next week. Thursday, same time, 4:30 p.m. And every Thursday for the next foreseeable future, at least till the end of May, we've got it all scheduled. Every week we've got a different panel and a panel for each of them. So next week will be international students COVID-19. Thank you very much. Thank you. Thanks, Brian. Thanks, Andy. Thanks, Chetan. And thank you very much, Mayank, for putting all of this together. Thank you very much. Have a good night and stay safe, everybody.